Hello and welcome to Watchmaking. Here is Ines.
And Lisa.
This is the podcast about watchmaking that you've never heard before.
We're going to take you on an exciting journey into the heart of timepieces, and our experts and guests will offer an exclusive insider's views, forecasts, and predictions on the industry.
From the intricacies of watchmaking to its far-reaching implications across different domains, watchmaking is your go-to destination.
So enjoy and
Viva watchmaking! Hello and welcome to the next episode of Watchmaking podcast, where we are talking not only about watches, but the whole horological ecosystem.
And thank you for your support of our latest episode with Marc-André Deschaux and the discussion we had on his forecast for 2024 and the state of the market. And today we will continue to analyze what's happening in the watchmaking reality and what's likely to happen. But before we begin, just a quick reminder for you all to vote for this podcast if you like it, and don't hesitate to leave us your comments on LinkedIn or Instagram.
Please welcome our next guest, the esteemed Oliver Müller, industry consultant, columnist, and most importantly, expert in watch business and luxury. And we are going to talk about the market in 2024.
Thank you. First, starting with good morning, and thank you for having me.
Yeah, thank you for coming. So let's start straight with numbers, because I think it's going to be an intense discussion. The Federation of the Swiss Watch Industry recently published its annual report on the state of the industry in 2023, and it is marked as the third consecutive record-breaking year for the watch experts, with a growth rate of 7.6% compared to 2022. So despite all uncertainties and cautious forecasts, the total export value reached a staggering $31 billion. So I have a question to you, Oliver. Last year, when you met Marc-André in this studio, you were also quite skeptical and a little bit cautious about the records and the records in 2023. But here we are, another record-breaking year. So the question is, what are your thoughts on such numbers? And, do you expect this year to be a record-breaking year?
No, I don't think so. And first, I would like to start with the following comment. I'm always very happy to be proven wrong if it goes into the right direction. So I'm very happy we had a record year, which true, I didn't expect, at least not to that extent. But we will get more into the detail of how that record happened. And to answer your question, I don't think 2024 will be above last year. Definitely not, for many reasons we're going to explain, I guess, later on, for many, many reasons. Yes, I think it will be a new normal. But 2024, I'm taking away all the suspense to it. Will be a good year, but not another record year above 2023. And I hope I will be proven wrong again, but I don't think so this time.
You mentioned that it's going to be a new normal, so we're not coming back to the pre-COVID numbers, or it's going to be, the prices will continue to rise?
Let me start with this. First of all, the record year came thanks to a very few brands. That's something which is very important to understand. Only half of the brands which are mentioned on our top 50 of the Morgan Stanley annual report on the watch industry have gained growth last year. So that's already a very important starting point. Most of the growth came from watches sold above 25,000 Swiss retail tax, so high end. Then you have a few exceptions. The exceptions are a brand like Swatch, which are, as I always say, an anomaly, but a very lucky one. They sold last year more than 2 million Moon Swatch. They had a very successful launch also of the other collaboration with sister brand Blancpain. That's very positive. The other exception is Tissot, again a Swatch Group brand, which performed very well in the middle range, under middle range, with the PRX line, which is extremely successful with Gen Z and others worldwide, because the price is very attractive and the product is just extraordinarily well designed. And it seems that they managed to expand the collection. So it's very polarized, mainly in the high end. We have those two exceptions. There are others, of course, and we should also talk about the independents. They performed extremely well. Independents, you have people making a few million turnover, and then you have some more serious candidates like mb&f. I can say the number because Max said it in an interview. It was 42 million sales last year, extraordinary. François-Paul Journe, H. Moser, etc. They did very good performances. But it's very, very concentrated. Now, what are the risks that we are facing today? The risks are we have a cooling consumption, even in the US, even though the market so far has behaved quite well for the luxury business overall and for luxury watches in particular. So I'm quite confident that we won't see a crash. It's coming down. We're seeing the prices coming down on the secondary market since March 2022, but that's due to the phenomena that the speculators were driven out of the market because at some point the whole thing was just overblown, and it's just like at stock market when people are getting concerned that there is no more upwards potential, then it goes downward. And what happens, just like at the stock market, everybody starts selling at the same point, which accelerates the negative dynamic. And we saw the prices on Rolex, on Patek, on Audemars, on the champions, the one who had performed the best before between 2019 until 2022, which logically came down also the most. So those are the risks when you're seeing that people are questioning the value retention, they are questioning the price increases, which brands are using more and more for different reasons. We can go more into the detail about that. And then the cooling consumption. China didn't restart like everyone had expected before. Everyone thought that once the lockdowns would go away due to the pandemic, we would go back to business as normal. It seems that it's not business as normal. So the brands being the most exposed to China, mainly Swatch Group brands such as Longines, but also Tissot, were strongly impacted. Luckily for Tissot, they have successfully developed other markets such as the United States and Europe.
Yeah, you just mentioned a lot of topics we can discuss later or in the future podcasts, so you're welcome to come back. But I'm going to come back to the report. And the numbers in this report, actually, they reflect the expert figures only, meaning that watches were just sent abroad, but not necessarily sold.
You're talking about the Swiss Federation
Swiss
report.
Federation.
Yes.
Yeah, I'm talking about the Swiss Federation report.
That's correct, yes.
And we can see that Ireland is in the first place for Swiss watch experts, followed by Hong Kong, Thailand, and India. While the US, as you also mentioned, and China is still leading the charts for the largest number of timepieces sold. But you mentioned that it's going to change soon. I have several questions regarding these numbers and this statement. So first, why is Ireland the market where most of the Swiss watches are sold?
No, it's Ireland is not the biggest market for Swiss watches. Definitely.
Exported.
No, not even for export. They have maybe the biggest growth rate, the biggest market being still the US. Then you have China, Hong Kong, etc., etc. So Ireland, which might seem strange, but it's very easy to explain. It's being used as a logistical hub by some brands, which I'm not going to name, but we know one we can name is Bulgari. Bulgari has a logistics hub in Ireland, so they export to Ireland for different reasons, which are tax reasons and factoring reasons. That's the simple explanation. It's not that the Irish people are buying that many luxury watches. I wish they would. There are a lot of
retailers there.
Yeah, there are a lot of retailers, but that the local market does not explain the size of the exports. Neither does Hong Kong reflect only the local market. Hong Kong is a logistical hub for Asia, and a lot of re-exports are being done from Hong Kong because Hong Kong is tax-free and it gives you access easily to China, which is a huge market, to mainland China. And most of the watch brands use also Hong Kong to re-export towards other Asian countries. So the numbers of the exports, and you rightfully said those are exports and not sellout rates. So I sell in to distributors, to retailers, and finally the sellout is to the end customer. And those numbers are not being published by the Swiss Watch Federation. The Swiss Watch Federation publishes statistics based on the Swiss customs. And that's where you get the numbers from. It's a very secretive industry. No one likes to talk about his own numbers. He would love to have the figures of his competitors, but he wouldn't like to share his own figures. So those export statistics are not the only, but one of the very few public data sources that you can access to.
And what about India?
Yes, that's a very good...
Is it going to be the future China?
Because we hear or we read a lot about it, but how, you said that China did not grow as expected. This market did not grow as expected. So how is India in all these numbers?
Now, I shall be more precise. China has not recovered where it was in 2019 before the pandemic. China is still a huge market. It still bears a tremendous potential. But in my opinion, we won't see the growth rates we had for the last 20 years in China. I think everyone should be reasonable enough to understand that once you have covered that market with tier 1, tier 2, tier 3, tier 4 cities, and there are many in China with millions of inhabitants per city, then you are at some points you have covered the market. And the question is also if the young Chinese will consume as their parents did. It seems that they're still very keen on Swiss watches, but we can't expect the same growth rates. So it didn't restart like it was in 2019. It restarted quite strongly at the beginning because there was the catch-up effect of inventory which was sold out, and then we had to refill. So the experts were showing that China would recover, but then finally we go back to a new normal. And the new normal, that was one of your questions before, will be rather one-digit growth rates than two-digit growth rate that the whole luxury industry has experienced during COVID, because people had more time and money to spend on luxury goods, and the 2 years after COVID.
Which were quite exceptional, right?
Yes. This was an exceptional situation. Again, I hadn't expected that the catch-up effect would be that strong. But it seems that human being is what it is.
Unexpected
and irrational to some point, because, you know, those watches, you can still buy them later on. But people were really eager to catch up consuming luxury goods, which was good and which created those fantastic growth rates. Now, coming back to India but that's my statement, because I know that someone stated something completely else. Unfortunately, India won't be the next China, definitely not, for many, many reasons. The first one being that India is still a very restricted market, very protectionist.
But it's a big market, like,
It's a
several
huge
billion.
market. I'm not saying we are not selling watches to Indians, but the watches that the Swiss are selling, which are mostly high-end, we are the champions of the high-end, more than 95% of the luxury watch market is covered by Swiss-made brands. Okay, that's a given. Swiss-made or Swiss-owned, because we have also Lange and others. Okay, so once you know that, there is not much left for the others, like to name them, Grand Seiko, etc. So Indians are buying luxury watches, but they buy them abroad for very simple reasons. If you buy them in Dubai, you don't pay taxes. If you buy them in Europe, you pay lower taxes, which you can either recover when you leave the country, because you're being refunded of those taxes, at least to some extent. So it's very difficult to earn any money in India, because the tax structure makes it virtually impossible to earn the margins that you would earn on another market. Recently, I talked to the ex-CEO, now I can say it because he's not anymore in charge of the brand, of Audemars Piguet. Audemars Piguet, you have seen the Morgan Stanley report, more than 2 billion this year, nearer a plus, I can't say it now, but you will see extraordinary results, one of the best performing watch brands, and they have 0 point of sale in India, for the very simple reason is that they have done all their calculation and taken the assumption that it would be very hard to make any money being there. They are selling. Of course, Indians are buying Royal Oaks, but they are buying them in Dubai, in London,
Not in India.
Paris, not in India. And when I read or hear things like India is going to be in the top 10 of markets, I don't think those people know their math and that they have ever been to India. Indians don't consume luxury like Chinese do. They buy luxury, but they buy with a very different pattern. It's a much more mature clientele, traveling a lot. Wealthy Indians are traveling a lot, as I said, Dubai, London, etc., etc., and they have a better assumption of what is luxury. It's not that the Chinese don't know, but they were a new class of clientele for the luxury business for the last, let's say, 1.5 decade. And the last half decade, you could see already that they had learned a lot about luxury brands. So no, India won't be the next China, unfortunately. And again, if I'm proven wrong in 10 years' time, kudos to those people making those forecasts.
I will invite you once again to talk about it if it's the case.
If I'm still here, but in the math, I believe more in the potential that we still have in the US, for instance. The luxury watches have a market share in the US which is under proportional compared with other luxury segments. So we still have a lot of potential to grow there on the long term, not 2024, because we know there are many uncertainties. Many people are expecting the Fed now to lower the rates again. It seems that the Fed is not yet prepared. And then we have those ominous elections coming, etc. So
it's all interconnected.
It's all interconnected, and it's all about the psychology of the potential buyers. But the US market bears still a tremendous potential. So does China, and so does South Korea and other markets.
And you're talking about USA, but what about Mexico?
Yeah, Mexico. Yeah, it's an interesting market. It's not irrelevant at all, but again, it's complicated for security reasons. As you may know, it's very difficult for a wealthy Mexican to go to a shop to buy an expensive watch. So you have to provide concierge service. There are high import duties, etc., etc. But it's an interesting market. Some brands are performing very well there. For instance, Hublot, it's one of their most important, if not the most important market worldwide. So yes, it bears potential.
Now, speaking about the short-term expectations, what markets do you think will be the most important for the industry?
I think with the ranking won't change much. I see the US, China together, the greater China, Taiwan. Taiwan is an important market, especially with very knowledgeable watch collectors. It's an incredible market. And ceteris paribus, meaning the more or less at same size compared with the potential Singapore, and then
South Korea?
South Korea, number 4 worldwide for luxury business overall. It's now a little bit more complicated, but I'm very much convinced that it's going to regain momentum. And then let's not forget about the Middle East. The Middle East, it's very funny in the watch industry because we have those periods where China was the El Dorado, but I am old enough to remember the Middle East being the El Dorado. Every Swiss watchmaker was traveling to Saudi Arabia, to Dubai, which was very new back then, Qatar, Oman, Bahrain, etc., etc. And we see now, for instance, the Saudi market now really exploding. There is a huge sales potential there due to a very high spending power by the local population, because the Saudi and the let's take as a comparison Dubai and Abu Dhabi, it's much more made of expats, of people living there now. Currently, you have a lot of Russians in Dubai. They spend
wealthy Russians.
Very wealthy Russians spending their money there, whereas in Saudi Arabia, it's mostly local market. So that makes me think that in the long term, Saudi Arabia might become a very important export destination for luxury overall and for watches especially.
And it's interesting because the watch culture there, it's quite vast. There are a lot of clubs and communities on watches and watchmaking. So the level of education of people about watches is also growing.
Yes, that's a very good point that you're bringing up. If we intend to connect with the younger generations, the younger clients anywhere in the world, we need to educate them and explain what we do and why we differentiate ourselves. What is artisanship, why a watch can cost 50 or 100,000 or $1 million, whatever. We need to educate people. And yes, in Saudi Arabia, there are very good initiatives. As well as in Dubai, you have a watch collectors club. I have met all over the world very passionate people. What they want to talk about, which is very intriguing for them, is the world of micromechanics. Because when they take their elevator, the elevator is talking to them, the car is talking to them, and soon it will be driving for us.
Artificial intelligence, but I think we're coming to this world of where we don't. There are a lot of artificial intelligence and a lot of micromechanics will be involved. So maybe it will bring more value to something that is handmade, and more value to mechanical watches. Yeah.
Yes, but there was a huge hype around Web 3.0 the last, let's say, 2 or 3 years. And everyone was trying to figure out how the luxury industry could take advantage of those new technologies, augmented reality, virtual reality. The metaverse was the thing to be, where you would sell a bag at a higher price than the bag in real life. I think I can quote now some people who are a lot more knowledgeable than I am, and saying that hype is already gone. I don't think it will fully disappear, but it didn't bring what people expect. And what people expect with luxury and watches especially are emotions. And I would like to tell you about a small anecdote. The last Basel World I attended, which was the last Basel World overall, was
2019. No?
2019, yes. And I was with two young friends, and around 28, 30. Okay, they were both very wealthy because they had made a lot of money with a thing called Bitcoin, and they were big watch collectors. And they told me, listen, Oliver, take us for a tour through Basel World, and you show us anything you think would be interesting for us. And the two boys, as I always call them, those two crypto boys, they had bought before the Kari Voutilainens, the Philippe Dufour, Urwerk, etc. So they were already very knowledgeable. And we went to see the main brands in hall number one, where you had Patek, Rolex, etc. They were not interested at all, okay? And then we moved up one floor and we went to a brand which I'm not going to name, which is jewelry brand making also very expensive watches. And the two boys couldn't go onto the booth. And they called me and say, hey, grandpa, because they always call me grandpa, can you get us in there? And the lady, of course, being not very smart, because you should never judge people by how
by the appearance,
the way they wear, etc. She got me in with the two boys, and then one of the two told me, "You see that watch? It was a double tourbillon, gyro tourbillon. He had bought that specific watch just a few months before for $1 million. I could never afford such a watch, probably not even in my next life." And he had bought that watch. What I want to say is that some brands don't know their customers. And next experience, we move on to the independents, where I have a few friends like Romain Gauthier. And first thing, I ask the sales guy at Romain Gauthier if we can see the novelties. And the guy says, no, you don't have an appointment, blah, blah, blah. So I catch Romain and I say, listen, those two boys, they have a lot of money. They are very passionate about watchmaking. You should spend, even if it's 15 minutes, we spend 15 minutes together. And we were sitting, the four of us, sorry, and we had a glass of whiskey, because, you know, it's the way you do things. And Romain told them about every watch, why he did that watch, how he developed that complication, with a lot of passion. The narrative was very good, and it was very spontaneous. It was no marketing BS. It was genuine storytelling. And the two guys, the two crypto boys, when they got out of Basel World, they told me, you know what? The best experience today was with Romain Gauthier, because that was a true experience.
No, it creates the connection, the true connection between the watchmaker, the person who made you your watch, and you yourself who actually bought this watch.
Absolutely.
It is very important, and it shows maybe the importance of having real fairs, not like digital ones. And I think, that's a very important point, which we will see in 1 month with the Watches and Wonders.
That's a very good point you're bringing up. I was very much convinced, and I had troubles about that because I had my own blog. I still have my own blog. And I was very much convinced that Basel World would go down the drain. I attended my first Basel World in 97. So I had seen the whole evolution where they became arrogant, where it became more expensive. And it was a fair of the 19th century, not the 21st, the 19th century. It was nothing. It was just a huge show, very expensive. All the watchmakers were happy because we could have drinks together, and we would meet some interesting bloggers, and we would meet some watch collectors. But overall, the whole format was totally outdated. It was of an other time period. And it's very interesting to see that Basel World went down the drain, and then that you have new experiences which are much more about sharing, about getting together, like Dubai Watch Week, Geneva Watch Days, Watches and Wonders. And maybe the magic is there when people meet and can exchange. And for me, it's very positive to see that, but it was very surprising to see, for instance, Geneva Watch Days. I thought, they have done it because one year we had that ridiculous Watches and Wonders digital way. It was not their fault. They couldn't do it the other way, but it was ridiculous because, my English is bad, but the English of some watch CEOs is even 10 times worse than mine. And you could hardly understand what they were saying. They are not good actors.
Yeah, and not seeing the watches in real life to try them on.
Absolutely. It's
but
not
actually,
the same.
I want to come back to the Watches and Wonders,
Yes.
because I think the basis of the watches, the main fair, which is happening in Palexpo here in Geneva, it has this notion of being kind of restricted for customers or for people who would want to come and try watches, or maybe to discuss it with watchmakers, because as you mentioned, the Geneva Watch Days are more open to the public. It's where you can actually meet the person behind your watches.
Yes, that's true. It's more spontaneous. You don't have a central point at the Geneva Watch Days, so you feel it's more spontaneous. It's less formal. So that's the big advantage. The huge disadvantage is that you don't have you can't plan your day as precisely as when you went to Basel World, which was one of the main advantages of Basel World, is that you would have at a given time during 7 or 8 days, you had a concentration from people coming all over the world, and that was very unique. I was running the show at a small niche brand, and I had in 1 week 140 to 150 meetings in 7 or 8 days. The positive point is that I was losing weight. My wife was very happy about that, but that's very unique. So the Geneva Watch Days, they have this. It's less formal, but it's more complicated for a professional visitor, because you need to move around. You need to go to this hotel, and then you need, that's a little bit more complicated. The Watches and Wonders is more formal, but the positive point is last year they already opened up for 2 days to the public.
And this year?
It's
and
3
this
days.
year it's 3 days, and that's very positive.
And actually, I really like the fact that they're organizing some events on the 11th, if I'm not mistaken, on the first day in the city. So it's where you actually can come and meet the watchmaking world and the horological culture.
That's the way to go. The magic is to meet people, but at the end of the day, it should be dual. So for professionals, the retailers, the watch collectors. I should have put the watch collectors first. The watch collectors, the retailers, some leftover distributors, because that's a thing which shouldn't exist anymore, and then bloggers, journalists, etc. And that's a very good opportunity to have everyone meeting each other. And the public days at Watches and Wonders are definitely very, very positive. I predict that the fair is going to further grow and attract new people. The only thing we should be we should pay attention to is the cost linked to those exhibitions. It's one of the parameters which went wrong at Basel World, is that at some point, if you're a small brand spending 200,000 Swiss on a watch fair, it's too much. And if you're a Swatch Group spending 25 million on your booth, or Patek 20 million, at some point there is a limit to that. And it takes away the spontaneous side of, for instance, the Geneva Watch Days, which is the very positive of this event.
And some brands even left Watches and Wonders in some ways because of the price. They decided to go and to be outside of the event.
Yes, but if I may, I'm not saying only this because I have friends organizing Watches and Wonders, but the thing is, at some point, we shouldn't be too opportunistic. So, it's because there is a central event, you can create other peripheral events around it. There is a time to watches, which I wish would become a little more better organized. It's
growing.
It's growing, and I wish them that they grow the right way, not only in size but also in quality. But if everyone moves out of Watches and Wonders, then who pays for all the people coming from all over the world? Who is paying for the flight tickets, for the restaurants, for the hotels, etc.? So,
and I want to also complain on the price of the tickets for the public. It's like 70 francs.
But it reflects the price brands have to pay.
But
I agree with you. I
think it's a little bit too much. For Switzerland, maybe it's a fair price, but for people who are coming from abroad and would like to visit, it's way too expensive.
I agree with you. And it's not a smart way of limiting the number of people. It's hugely successful, and we should be happy about that. The watch brands, rather than complaining about all those people coming on Saturday and Sunday and now Monday, they should be happy, because those are the buyers. And they should. Basel World did the same mistake. They were selling the tickets to families, to normal people for $60. That's a way too much money. We should keep that to a reasonable level. And you're right saying the Swiss have at least on average, a high spending power, but someone coming from Spain or Portugal spending $70 on top of his flight tickets and everything else is way too expensive. I would favor reasonable prices, and then, of course, we would get even more people in, but that's positive.
And there are other events which we can talk about for this year. There is supposed to be only watch this year. What do you expect? Do you expect it to see this year?
I wish it happens, but on the rational side, I think it will be very complicated to restart the positive dynamic of only watch. With everything which happened, the bad coverage and the lack of communication from the organizers, and I am Luc Petavino's friend, the organizer. I admire what he has managed to build up all these years. I think they did a huge mistake by not communicating. They should have, at the earlier point, come out with some good explanations why people were questioning what they were doing. Is it going to happen again? I wish so, but my rationale says that it's going to be very complicated. At least it's not going to be business as usual. Many brands have already pulled out. Many smaller brands are already selling or have sold their unique pieces dedicated to only watch. So it's not going to rehappen any soon. It's a pity because it's one of the very few events around the watch industry which manage to federate people and
for the greater cause, for the better cause.
For the better cause.
And from different brands, higher end.
Absolutely. Absolutely. Even though, the point was also that there were a few star brands fetching extraordinary high prices like Patek, Audemars, Richard Mille, and a few independents like Recep Recepi, who did an extraordinary result, etc., etc. So the negative is that maybe the catalog grew a little bit too wide, with more than 60 brands for the planned last edition, which in the end didn't happen. And the other thing is it good that one event, even though it's for the good cause, for charity, catches all the money that we can produce in the watch industry? I would that's just an idea. Maybe we should think about an event like Only Watch, federating the whole watch industry, at least those who want and can participate. And every other year, like Only Watch was doing, give the money to another cause. It can be on cancer. It can be on the children.
Swatch has recently, with Omega, they made a charity event as well at Sotheby's.
Exactly. Those are all good initiatives. But the more we federate people, the more brands we bring together, the higher the awareness of the causes. And that's what Only Watch did so well during all those years, is they increased the awareness, which was good for the charity, which was good for Only Watch as a foundation, but which was good also for the watch brands, because you have extraordinary positive articles in the New York Times, in the Financial Times, all over the world, and it's seen under a positive light.
Yeah, but coming back to the events which are going to happen this year, which of the events would you think would be most important for the industry? That could have an impact on the industry, let's say that.
Yes, I'm very much looking forward to Watches and Wonders, because that will be a good indicator at what watch brands are about. Times are getting more complicated, whatever people say. As I said in the introduction, that was, I think, your first question, what I forecast for 2024.
Yeah, prices are cooling down.
A slight minus. Hopefully, as I said, I will be proven wrong. But probably 2024 will be a little bit below 2023. Even if we would achieve a -5 of the exports, we would be above 2022, which was the record year before 2023. So still a very, very good year. So Watches and Wonders will be interesting to see what watch brands will present as products, if they are confident enough that the clients are there. I think the brands overall will be a little bit more cautious about what they present, because when times are more complicated, when people think twice before buying a luxury watch, we will go back maybe to a little bit less crazy things. So I look forward to seeing what the main players will present, and the independents, hopefully.
You think you will see a big difference between those two entities, the independent, what they will present, and the big brands?
Let's face it this way, they are taking less risk. if you're managing a brand doing, let's say, 15 or 20 million sales, you take risks because sometimes it's your own money or it's some private investor's money, but the market is not judging you the same way as it does with an institutional brand. You can see that on watch blogs like my friends at Monochrome or Hodinkee. They try to predict what the brands are going to launch this year. Sometimes
Rolex,
they have good ideas. Sometimes they are quite right, and sometimes they are totally wrong about what the brands are going to present. So the expectations are a lot higher. If you're Rolex, you can't come up with a square watch without taking the risk of the whole market asking if the CEO went just crazy. But last year, that's the good thing about even institutional brands, because we always talk about the independents being so creative. I recently said in an interview, and I will re-quote it, I have no problem with that. I hope that those independents are becoming a little bit more creative. We have creative people like Max Büsser at mb&f or Overk or others, but many of them which think of themselves, and the journalists praise as being the new Mozarts of watchmaking, are very conventional. I found more creativity at Rolex or at Omega or at Audemars Piguet or Swatch. Yes, Swatch.
But sometimes I think simplicity is the way to go, because Swatch has proven with the Moon Swatch that these watches that are talking to you mass market, they are the way to go to do the business now. Or you not agree?
No. I agree. But
I'm not talking that independents should go to these bioceramics and lower the
I got
prices.
your point. My point is, and I'm sharing that with someone I appreciate a lot, who is Max Büsser, who said the same thing in an interview. He said, I hope the next decade will bring a lot more creativity than we have seen the last decade. Because if everyone does a wristwatch looking like a pocket watch made by Abraham Louis Breguet, transferred to a wristwatch, and I will be nice today, I'm not going to name anyone, it's getting boring. I see those young guys like below 30. I'm rather approaching twice their age, and when I see those watches, I say, where is the creativity, guys? Abraham Louis Breguet, Lépine, Leroy, and name them, they would never have done those watches if they would live in the 21st century. If Mr. Breguet wakes up tomorrow and he sees guys doing the same watches he did 2 centuries ago, he would be very disappointed. He invented, what is the biggest breakthrough in terms of mechanics of the last 3 decades almost? It's the coaxial escapement at Omega. Where does the coaxial escapement come from? From Abraham Louis Breguet's échappement naturel. That was a long time ago. So what I'm saying is, in mechanics, Max does extraordinary things. Gröbel Forcet does extraordinary things. So does François-Paul Journe, or more recently, Recep Recepi. That's the way to go. Let's be creative. The guy who is running the show at Cartier or Patek, he has to be a little bit more cautious. He has a lot of history behind, so that he needs to be true to the legacy of the brand, and he needs to deliver results. Richemont is a company listed on a stock market. Patek is a very old and family-owned company. You can't do maybe too crazy things.
Yeah, and it's also a problem of the brands reinventing watches or models from the 70s, 80s now. I know it's a kind of but
that's a trend. I understand that if
but there's no creativity behind this one.
If neoclassical, neo-vintage from now the 70s, 80s, like the Tissot PRX, just to name one, or at Longines, interesting things happening, or, I understand, or at Tudor with the Black Bay, etc. I understand that those brands are taking advantage of the new tastes of Gen Z, looking at the 70s and 80s, not only for watches, for cars, for furniture, etc. That's the new cool. Why? Because unfortunately, we have to, I think, agree on that. The greatest period in design creativity happened in those periods, in the 1950s to the 1980s. Since then, if I look at new cars, there are not many new cars which trigger an emotion on me. I recently saw a new Ferrari, which finally triggered an emotion, at least for me. But sometimes I look at cars and I think, oh, that's a BMW. I know it's not a BMW. It's whatever, XYZ, but they look all the same. And we should be very careful with watches not to use all the same design codes.
Yeah, and this brings us to another topic we would like to discuss with you. It's a problem of justification of prices on watches, because brands are starting to raise prices. And we know a lot of examples where people sign up for one model to discover 3 years or 4 or 5 years later that the price is doubled or tripled or even quadrupled, but without any justification of the actual price. So what do you think about this trend, if I can say, or the aspects of the market?
I think that pricing power is good for a luxury brand, but you should not overextend your price increases, the price hikes that we are seeing in the recent years, once a year, even sometimes twice a year. So let me start with this. The rationale is that most of the high-end Swiss watch brands are producing in Switzerland, and you know that the Swiss franc is very strong due to a strong economy, especially towards the renminbi, which we all know the Chinese currency is not exactly following the rules of a free market, to say the least. So it's a politically correct statement because we love the Chinese. But of course, the Swiss franc being so strong, the main brands, the important brands producing almost everything in Switzerland, we need to adapt our prices if the FX rates go not the way we expect, so the renminbi or towards the dollar, etc. You need to readjust your prices. The problem is not so much for an ultra-high brand like Richard Mille or even Patek Philippe. The problem is when you are a middle-range brand, or even a premium brand like Omega. You have to imagine that the price increases that they have had the last 6 or 7 years have increased tremendously the retail price for what the consumer perceives as being still the same product. So he sees a watch which cost 5 is now 7,000, and 40% more for a consumer demographic with that spending power is huge. So it's a very touchy subject. We should be very careful not to keep increasing the prices too high unless you are an ultra luxury brand and you consider that someone able of spending 6,500 on your bag, I'm not going to name the brand, can pay 9,000 for the same bag 2 years later. Is it good? I don't think so. I think you should treat your customers with respect. We are in a luxury world, so you don't have to justify anything, but it just needs to be logical in terms of what you're doing. And it's not because you're becoming stronger that you should keep increasing the prices. But at the same time, let's take another very specific example. You have a Royal Oak Jumbo at Audemars Piguet. You sell it for 20,000 in about 2018. The resale price was more or less the retail price until mid-2018, 2019. And then the market goes crazy because the waiting lists are getting longer, crypto money is coming into the market, people start speculating on the watches. It all triggers an incredible, fast and strong price hike on the secondary market. So everyone starts thinking the prices will increase forever. Now you're the brand. You're selling something first 20,000, then 23, then maybe 25,000 as an official retail price. But on the secondary market, you are seeing that your Royal Oak Jumbo is now selling at more than 100,000, 115 until March 2022. So you start thinking, okay, if people are prepared either to wait years to pay the real price or to get the fast track lane and pay a premium, which can be twice, 3, 4 times the official retail price, then you start thinking, okay, price elasticity, like we once learned all at school or at business school, is quite high in luxury. But at some point, you should be careful about that as well. The waiting lists ever increasing, frustrating people who don't understand because they are really passionate about watches, why they should have to wait 5, 6, 10, 12
for some
years.
steel models or something.
No, but even for other watches. So it's the difficult game of keeping everything in a balance, more or less. Waiting is good. Luxury is about scarcity. If you find the same watch, the same bag, the same car at every street corner, then it's not anymore luxury. It's something else. Then it's becoming prestige or however you wanna name it. So it's a difficult game of keeping everything in a balance. And I think that the recurring price increases are becoming a problem if you're, let's say, in the mid-range to the premium segment.
Yeah, I just want to mention about the independent brands as well, because for them it's I think it's killing all the thing.
Yeah, and you're saying elasticity, and we say that in auctions the prices are going up, but they also can lose value also, those watches. So that's all about this elasticity. It goes in both ways.
It goes both ways. We should be very careful not to think that it will that the trees are growing to the moon or to the sky at least.
But also the brands need to deliver, even if they
that's
promise
another
something.
issue. That's another issue. But that's again, we are back on the issue of keeping the whole thing in a balance. If you open up too much the deliveries to the market, your brand becomes less desirable and less attractive, and people start, luxury is having the thing that someone else can't have. Your Birkin bag, where you are on a waiting list because you are known from the Hermès boutique, then you wait maybe 18 months, and if you're unknown, you will have to wait years or pay a high premium. So it's very difficult. Last year, just to give you a number, I can give you this number because the CEO mentioned that already. Audemars Piguet's growth was only 1,000 more pieces in 2023, but they had a record year in terms of sales. So the growth in average on the average price was tremendous. They increased a lot their sales, but not through.
But the production capacity is limited.
No, of course they could deliver. They could deliver easily, substantially more watches. But why would you do that? You need to keep, just let's stick to Audemars Piguet because it's one of the base case studies what you should do with a luxury brand, because foremost it's a luxury brand, it's not only a watch brand. They reduced very strongly the number of doors worldwide. In 7 years they went down from 470 doors to now around 96 doors, and they will further go down. So if you calculate those 51,000 watches sold in 2023 on a little bit more than 90 doors worldwide, doesn't make a lot of watches. So you should be very careful at monitoring how many you should deliver to keep the market a little bit hungry. But at the same time, you have to be very careful not to frustrate the people.
Yeah, and you mentioned very important issue that brands are scaling down their presence with the retailers and closing the doors worldwide. And we have recently we had this issue with Watches of Switzerland, which shares dropped tremendously in the beginning of this year. Of course, maybe it's not directly related to this issue, but the question is what future lies for the retailers, which are not approved by the brands. Let's put it like this. Because I think the tendency is that there will be less independent retailers, and watch brands will consolidate around the retailers that they approve to sell their timepieces.
That's a very broad question. Let me start with this. Yes, the overall tendency is to reduce the number of points of sales worldwide. Even Rolex has substantially reduced its retail network the last few years, with the new CEO being aware that he should concentrate to have a better quality in the points of sales, a better product availability, etc., etc. So they reduced by about 20% their overall number of doors worldwide, which is substantially less. Watches of Switzerland. Yes, let me tell you this anecdote linked to them indirectly and to Rolex directly. I am working with Morgan Stanley, which is a very reputable bank, a financial institution. And since 2018, I was telling all their customers, but that was only my assumption, not the bank's assumption. That was my personal assumption, that at some point Rolex would start integrating their own retail. Everyone was telling me that I was cuckoo at best. And the last time I said that was in May 2023. I had a client of that precise bank, which I can't name the name's client, representing an investment fund, being an investor at Watches of Switzerland. And he asks me again, he said, Mr. Müller, you were quoted a few times saying that Rolex at one point would... And I said, yes, sir, I am 100% sure that Rolex, and later on Patek Philippe, we can after that talk about, will do the same. They will capture, at least to some extent, their retail, not only for capturing margin, but also better controlling the inventories, better controlling the sales, to whom they sell, at which price, where, etc., reducing the gray market, which is not good for the brand's reputation / the brand equity. So, a few months later, that same gentleman, the day after the deal with Bucherer was announced, and I can tell you, I have no insider information. The day after, this same gentleman had the politeness to write to me and say, I have to apologize, dear Mr. Müller. I thought you were totally crazy when you told me that in May. And he kept his notes to his partners saying that this guy is out of his mind. This will never, ever happen. And it happened. And I say, no problem, sir. I understand. I'm living in this industry on a daily basis. I have an assumption that maybe, is a little bit different from yours. And it was not a defensive move by Rolex. So it's not because they had to, it's because it's part of a wider plan, and we will probably
long-term
plan. Absolutely. And as you know, Rolex is executing everything to perfection. We will see in the next few years the rollout of that plan, and we will see probably other major acquisition.
Maybe not acquisition, but I was thinking of auctions as a part which has not been touched. The area which has not been touched by Rolex.
What are your predictions about
maybe
that?
Maybe there will be like more rules or regulations implied by Rolex on selling their pieces, since CPO programs already started. And
I'm getting back to the auctions and the CPO in a minute. I'm just finishing on Watches of Switzerland. So Watches of Switzerland is one of the retail networks which potentially are very interesting. Many doors, many of the best locations, very well trained staff, a lot of knowledge in retail, because retail business is a very different business from running a brand. So Rolex did a very smart move buying Bucherer, because they buy not only doors, they buy knowledge. Century-old knowledge at Bucherer. Besides that now they can control whatever they want to control, which brands they are selling, what they sell from Rolex or Tudor, the sister brand, etc. So it had a tremendous impact, as you know. The day after that announcement, the market capitalization of Watches of Switzerland lost more than 20%.
Almost
during the day. It was 30%. It came back the day after to a minus 20. And more recently, they re-lost a lot of market capitalization. We are talking hundreds of millions of pounds, not peanuts. Watches of Switzerland failed to deliver the results that they had announced in December. So in January, the market cap went down because the market was questioning their capability of being still in business with a big brand like Rolex, the number one brand in the watch industry, questioning their partnership. I don't know if they are questioning, but at least they have decided that they will integrate some of the retail network. So what is going to happen in the future?
Yeah, for the
less
retailers.
Less doors, yes, certainly. The strong retail networks have a bright future in front of them, because I think even though omni-channel is the magic combo, so you can talk through Instagram, whatever. It's just a tool. We don't care with social media. You can talk to your customers, but at the end of the day, that customer loves to be invited to some social event. I mean, the AP houses of Audemars Piguet is one of the best examples of what is the new retail. It's not about selling, it's about keeping a relationship with your end customer. And the AP houses are just an extraordinary way of combining your core business with hospitality. That's what it's about. You can organize a concert, you can have a dinner, you can invite your friends, etc.
Yeah, so your whole community.
You create bonds with your end customer. That's the future.
So coming back to Rolex and
Rolex and the auctions. The auctions are certainly one of the next hot topics, together with overall CPO, the certified pre-owned. Auction is a very important way of measuring the brand equity of any brand. There was what we call the auction marketing about 20, 30 years ago, where the brands exaggerated a little bit, to say the least, by the prices they were paying for their own watches. Patek Philippe bought quite a few watches at auctions for their museum, which is an extraordinary museum, which anyone should visit, visiting Geneva. It's one of the most extraordinary places. So that keeps the value, because the prices on the secondary market are high. It keeps the value perception of the brand high, which is a good thing. Now, for Rolex, it's a totally different ballpark, because there are so many more Rolex watches somewhere in the world. There are so many Franken Rolexes wandering around. So if Rolex were to get into that auction business, which they probably will one day, directly or indirectly, probably they will do it in a, let's say, white labeling formula, working with Sotheby's, Christie's, or Philips, I don't know. And they would delegate that. I think it would be a very positive point. And we will see the secondary market changing a lot, being a lot more professional. Because as of today, I'm questioning sometimes a little bit, the millions being spent on a single watch not being 100% authenticated, etc. We saw the scandal with the Omega Speedmaster for $3.1 million, which was proven to be a Franken watch.
But that's another topic to discuss.
That's totally, that I'll come back another day on that one.
For sure.
Well, you talked a lot about value, and we wanted to ask you a more personal question, not regarding the market, but could you tell us what are your 3 most important aspects or features for a watch? What brings value to a watch for you?
I'm going to say something which you have heard probably over and over again. It's the emotion that I link to it. It's not the value of the watch. It's not if it's the most expensive watch I ever owned. I think that's not the point. I was lucky enough to own a few quite expensive watches from Laurent Ferrier and another independent watchmaker called Beat Haldeman. I think it's the story that you link up to it.
The experience?
The experience, exactly. The relationship that you build up and how you create the bond between you and that brand or that watchmaker. I think those are the most important parts. I'm not thinking in terms of value retention and even less about status. That's for me. I know there are many people who are buying some brands because it gives them a social status. I would say that's the least important, but I can understand that some people will do that or buy a specific car brand or, that's...
And if you could only wear one watch, which one would it be? Would it be one of the watches you just talked about? Or if you could only pick one of your collection?
I owned a watch which I dearly miss, which was the Laurent Ferrier micro rotor, the first one ever produced, because back in 2010 to 2013, I ran the show there with Laurent. And I decided that's the emotional link or the narrative to it. We had a tremendous start with a tourbillon, and then we needed to do a time-only watch, like the watch collectors always say you need to do a three-handers, blah, 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 blah. Okay, so what do? We decided with my two friends at La Fabrique du Temps, Michel Navas and Enrico Barbesini, and of course Laurent Ferrier, to do that micro rotor, with a natural escapement, Abraham Louis Breguet. And it was the first time that's my emotional link to it. The first time I spoke about the aesthetics of the watch was in a plane with Laurent Ferrier, who is the most gifted watch designer I ever worked with. And I said, Laurent, because, you think that you know everything, but jack of all trades is master of none. And I said, Laurent, we could do this and that and that. And then he said, no, I don't think so. I have an idea. And then he took his sketchbook, like exactly like this, black, and he started sketching me the indexes of the dial, which were good, drop-shaped, very thin, and he started designing the hands, and then he explained how he would do the case, and I was, wow. And when I saw, as of today, we launched the brand in 2010, we are 2024, I still think the micro rotor, the first one, was the nicest piece he has ever designed. I own the #1 prototype, which was dismantled, reassembled many times. Every time I would get back from a travel, I would give it back to the watchmaker who would test something new on it, etc. And that's the piece I would wear. But it doesn't necessarily need to be the #1 prototype. It could be any of those watches.
Because they hold that experience, that history, that
emotions.
Yes. And I'm a huge fan of François-Paul Journe. I'm a huge fan of Lange und Söhne. I'm a huge fan of De Bethune. But I don't have that personal relationship to a specific watch.
Yeah. And if you can meet and have a dinner with one person from the watchmaking world, dead or alive, who will it be?
Still alive.
Or dead.
Or dead.
Or someone has passed, like, maybe Abraham Louis Breguet.
Yeah, that would be very cool.
You'll
I was lucky enough. That would be the dream of any watch collector today. I was lucky enough when we launched the coaxial escapement of Omega to spend the whole day with George Daniels, who was the inventor, or at least he developed the natural escapement of Breguet to the coaxial escapement for Omega. And I spent the whole day with this gentleman, and it was an extraordinary experience. So if I could redo that, because that was, if I'm not mistaken, 99, I could redo it today with the knowledge that I luckily acquired since then on watchmaking technique, thanks to Michel Navas, Enrico Barbesini, Karsten Frasdorf, and others, I would definitely love to meet him again. But I'm lucky. I meet with a lot of extraordinary people, artisan watchmakers, enamelers, because, people, if you ask that question, people will drop a name of someone very famous. But for me, the most enriching encounters I ever had were with people working at the bench and where
hidden heroes of watchmaking world.
The heroes of what?
Hidden heroes.
Yeah, of the hidden heroes, exactly. Yeah.
People
the
in the
enamelers,
shadow,
the engravers, the watchmakers. You meet people who are very passionate about what they do. They are very proud of what they do, rightfully. And those are the most enriching encounters. Besides that, sometimes you meet watch collectors who are extraordinary people outside of the watch world and in the watch world as well.
Yeah, that's true. So thank you very much for coming to us.
Thank you. Thank you for having me.
Yeah, it was very insightful. And I want to remind to everyone that you can also suggest the topic of discussion and maybe a guest that you want to hear next. So that was it. Thank you for being with us.
See you soon, and
Viva Watchmaking!